Hi friends, this is Pradeep from Ace Trading Hub, and today again we are going to talk about the Bedwater Nifty Index, and there could be a separate video or in the same current video. I'll cover Bank Nifty as well. So stay tuned in. But this is very important as we are seeing critically important sideways movement, and I'll tell you how basically Nifty indicated that it will move sideways, and we'll cover this the 6 weeks of movement and how it is actually indicating where Nifty wants to go as per the charts. So stay tuned in, and we'll also talk about Fibonacci support and resistance levels for Nifty, and if possible on Bank Nifty as well. The comment will also give you some insights on how to take a look at charts to decipher the underlying picture. So if you're really interested in learning from the markets, from charts, from technical analysis perspective, then do watch this video till the end. So let's start with Nifty first. And if you look at, let's say, Nifty over here has formed, look at the mouse pointer, has formed something called doji. I'll just mark it over here and delete the circle. So this red candle, small red candle, is actually called doji, wherein opening and closing are very close. If this kind of candle is formed, then it means that buying and selling is kind of in balance, and because of that we require a fresh trigger, fresh strength, or fresh weakness. So this week was followed by a candle which was showing some support at the lower level. So it was giving us hope that it may rally further from this point onwards. The uptrend, as you can see, is still intact over here, and it is kind of steep uptrend so far. After this particular hammer-like candle, we saw something called bearish engulfing chart pattern, which is very potent in Japanese candlesticks. You can see that pattern was marked correctly over here with this pointer. Let me extend this pointer over here. Okay, so this is bearish engulfing pattern where in previous green candle body, this small body is covered by the red candle body, so that is a basic formation. You have to have uptrend intact, and after uptrend you can see that there is a higher opening for the candle, and there's a lower close. The higher and lower close are basically with respect to the previous candle's body. That is the most important part. So there's a learning for you. And during this formation of this bearish engulfing pattern, you can see that this support level was broken decisively. There was some small rebound from there for the week, but then next week again there was a follow-up selling. So then that selling was absorbed near this Fibonacci level. So this is once again indicating how significantly important these Fibonacci levels are. The level was around 21,200. Let's say that's a round figure level, and the exact level was around 21,178. So from there was a rebound, and last week's movement, basically this green candle I'm talking about, that was opening Marubozu. Opening Marubozu was again showing some strength because there was no lower shadow. That's the meaning. Upper shadow was there, and when I say shadow, this is the upper week I'm talking about, and there's a long, reasonably long green body candle, but on the upside there was a shadow also. So that indicated that there was some selling, and at the same time on the lower level there was a buying. So that is the technical picture given by the previous week. This week that we have closed, you can see that there is very small body red candle over here. Now this small body red candle again, it means some uncertainty, some stalemate between bulls and bears, buyers and sellers, and it is right above this critical level of 21710. So this is indicating that we are still having some tussle between buyers and sellers, bulls and bears. And if you look at the support level, as I have mentioned, 21178 is a support over here. So that is critical on the upside. Around 22,200 300 level is critical, and beyond that, around 21,000 22,375 level could be critical. So overall, I think we are moving in a intermediate term range, and that range needs to be broken decisively for it to go up or go down from here. So we have to watch for the clues in near future for deciphering the Nifty's direction. So that's the view on Nifty for the time being, and we'll cover it again next week or next to next week. And now we'll go to Bank Nifty. Hi, yeah, this is again a view on Bank Nifty. Bank Nifty, if you look at it, the recent movement starting from here, we had seen bearish harami that we had covered in our earlier commentary, and after that was this harami cross kind of pattern. All these names that I'm taking are from Japanese candlesticks literature, so don't get bogged down by the names. This basically indicated that it would move sideways. At least the uptrend was stalled till that point of time, and after that was this break that broke the previous 2 3 weeks, 2 to 3 weeks support level lows basically, and swing then turned down. After that, was a follow-up selling in terms of this big red candle. This big red candle indicated that there was some selling appetite in banking stocks, so that actually led to a definite bigger swing breakdown over here also. It took support near the Bollinger Band average, that is 20-week moving average. Simple moving average is used in Bollinger Band. So there's a rebound from that level, but then still next week again there was a big sell-off. So what happened during this sell-off is it basically covered this gap that is having a significance in terms of support and resistances. So there was some support expected around this level, but in the first instance, it just moved down through that support. So the impact of gaps technical significance is reduced to that extent. After that, last week it showed some sign of buying in anticipation of the upcoming budget and the monetary policy, the then upcoming budget and the monetary policy. And now it is behind us. And what happened is, despite this budget and monetary policy, the index has basically done nothing much. It was volatile during the week, and this is again, if you look at this current week's movement, then it has formed something called a bearish hammer. But no, this is hammer. For hammer, the color of the body is not that important. What is important is the support that it is indicating. So here, I think you can see that around 44,200 to 44,500 is a support on the lower side, and on the upside it has a resistance of at around 46,400, and above that 47,000. So this is a broad range that Bank Nifty is currently confined to, and we need to see a more fresh trigger to break from this zone that would indicate further direction. So that's the technical picture for the time being. Keep watching my channel for getting this crisp and clear views, and do subscribe to my channel. And I'll see you in my next video with more valuable information. Thank you.